I'm the financial equalizer, J.E. War. What I do is help you get money from the government. You know, what I found out was you don't have to know a thing about taxes for the government to take your money. But if you want the government to send you money, you need to know a few things. And that's what I'm about to do. I'm about to give you a few things that'll set you up where the government pays you instead of you paying them. So this is number one in our series on file your taxes. And one of the most important things you can do, I don't care if you make $1,000 a year or 10,000 or 20,000 a year, you got to file your taxes. Because if you know these few things I'm about to tell you in this tutorial, you'll end up making more money than if you didn't file. So, Second Chance Hope Group is a nonprofit organization that is here to educate you on how money works. We don't charge for anything. Now, if you got a financial problem, if the odds are against you, call the equalizer. That's just like in the movies. That's what he advertised on the internet, except for the financial part. Now, he went in there and strong-armed some people and beat them up. Well, I know financial karate. That's the only karate I know. So I can beat the financial industry up with my knowledge, and I'll share that with you. Now, what we're going to teach you is why you should always file. So just watch these videos, learn from them, and use this to make more money. You know, you look at what the IRS does, and they mislabel the things. The labels don't make much sense, and I don't know why. Why don't they just make it plain and simple? But the IRS likes to hide the meaning of the rules. And I guess I do know why, because it makes them more and more money. They try to make it as complicated as they can, so you'll just give up and not worry about it. So they don't want you to have the knowledge that where you can get money from them. And so they cover up the truth with mislabeling things. And one of the biggest things they mislabel is the standard deduction. The standard deduction is a money maker for you, but a lot of people don't even know what the standard deduction is because they don't bother to train you. Well, we're going to get you that information and show you how to turn the IRS into a money maker instead of a money taker. Okay, so looking at the standard deduction for 2024. That means that if you're single or married filing separately, the standard deduction is $14,600. Well, you know, let's say you make $10,000 that year. You know you don't have to pay any taxes, so why bother to file your taxes? Well, I'm going to show you why, because that $14,600 is $4,600 more than the standard deduction. It's going to get you qualified for earned income credit. Earned income credit puts money in your pocket. So that's a good thing. If you're married filing jointly or qualified widower or widow, $29,200. So you can almost make $30,000 not paying any taxes. If you're head of household, $21,900. Now, head of household means that you have dependents that are living with you, plus you have somebody else that earns money, but you're paying at least 50% of, more than 50% of the expenses. So you can qualify as head of household, $21,900 exempt from taxes. So all of these, I'm gonna go through these a little bit more, but these help you qualify to get the earned income credit, and that's the next thing I'm going to explain to you. So the way this works is pretty simple. Earned income credit is a reward system that the federal government does. Uh, they don't care how small amount of money you make. They like you to go to work. They like you to work. So what they're saying is, hey, you're trying your best, so we'll help you out with some extra money. This is extra money. You know, this is not money you put in. This is money they're paying you because you know enough to get an earned income credit. So the beauty of this system is it pays you. Now, if you're making $10,000 a year and your standard deduction is $14,000, you're going to qualify for earned income credit. They can send you up to $600. $600 they send to you. Now, I think that's worth filing your taxes. You got to think of it like a discount, and it's a pretty good sized discount. So imagine you earn $20,000 a year, and the standard deduction is like saying you get to subtract a certain amount from that before you have to pay taxes. So if your standard deduction is $29,200, filing married in 2024, you don't owe any taxes. Okay, the standard deduction is $29,200. You only made $20,000. There is no income tax. Plus, you qualify for an earned income credit, which means you're still going to get some money from the federal government, even though you didn't pay them anything. So this standard deduction is great, and it just went up in 2024. So the higher that deduction gets, the less money you have to pay. Okay, child tax credit, CTC. What it is, it's a credit for each qualified child under 17 years old at the end of the tax year. The amount up to $2,000 per child with up to $1,600 refundable for 2014. That means you can get $1,600 back. Refundable portion, even if you owe no taxes, you may receive the refundable part called additional child tax credit. So if you got 2 kids, you could qualify for $3,200 from the IRS. I'd say that's good knowledge. Okay, the next one we're going to look at is child and dependent care credit. So what it is a credit for a percentage of any child care expenses that you have to pay so you can go to work. So they're going to help pay for your child care. And amount up to $3,000 for one child dependent and up to $6,000 for 2 or more. So that's some good money. Income based on credit percentage increased as income increases, but is available even for lower income earners. So this is something you can qualify for if you've got your child or have dependent care credit. There's a lot of other tax credits we can talk about. The American Opportunities Tax Credit, AOTC. What it is a credit for qualified educational expenses for the first 4 years of college. So you can deduct some of your college expenses if you're going to college or other education. Among amounts up to $2,500 per student. Refundable portions up to $1,000 can be funded even if there's no taxes owed. Okay, the next thing we want to look at is something called lifetime learning credit. So what the federal government wants you to get educated and so you can make more money is really why. And if you make more money, they get more taxes. So this credit is for tuition and other educational related expenses. So if you're taking classes uh, that are certified classes, this might be just for you, and it depends on what you're taking. Okay, and the amount is up to $2,000. So this is this is kind of sweet. Um, it's something you can qualify for even if you are lower income. Now I'm going to make you this promise. If I can help, I will. So if you got financial problems, odds are against you, call the financial equalizer. That's me, and I'll do my job to help you find the money. So my email, je@secondchancehopegroup.org. So you guys that are in prison, if you want me to call you, you can email me first, and I'll get you on my call list, and then you can call me. If you want somebody else to give me a call, or you're not behind bars, just give me a call, 737-293-6940. Please email me first so I can set up a schedule. Now, the website is secondchancehopegroup.org. And please email first and set the appointment for a call. That way I can dedicate enough time to you. Second Chance Hope Group is here to help you. It's a charitable organization. There's no charge for any of my services. I hope this tutorial does you some good.